Hello guys, it's Max here from Daily Market Movements and welcome back to another Market Outlook video where today we're going to be discussing the trading week from the 17th all the way through to the 21st of July. Now let's get started by talking about economic data. Luckily going into this week there's actually not too much data that's to be released. On Tuesday we have the core retail sales figure, and then apart from that it's only really on Thursday when we have a little bit more data. That includes the initial jobless claims, etc. This is coming off the back of last week where on Wednesday we had the CPI and the PPI on Thursday, and of course that had a massive influence as to where the market traded throughout that week. And of course that direction was upwards, which was good to see. But I would just like to quickly draw your attention to this CMC survey. This shows you that there is over a 90% chance that we're going to get a 0.25 basis point hike moving into next week, because of course guys, next week we do hear from the Fed. It's been the big question mark going into next week. Are we going to get a rate hike? Are we not? Especially after last week's CPI data, which come in significantly lower than expected, giving us that 3% versus the 3.1% expected. At this moment in time, there's more than a 90% chance that we're going to get that rate hike next week. From my own humble opinion, I don't believe there's too much data getting released this week that could potentially change the Fed's mind. So it looks at this moment in time highly likely that we're going to get that 0.25 basis point hike moving into next week. But let's just quickly talk about the markets from more of a technical perspective. Of course, we achieved some pretty big milestones yesterday. Now that the S&P 500 went up and hit 4,550, we have a NASDAQ 100 which traded above 15,500, and this is very significant. Why? Well, this is because we are now trading above the 0.786 fib area from the peak to trough during the 2022 bear market for both the S&P 500 and the NASDAQ 100. So this is initially an area where I did expect to see some consolidation, maybe a 5% reversal as we try and digest these very large gains that we've seen so far this year. The first half of 2023 we're up over 17% here for the S&P 500. So just looking and focusing on the S&P 500, I really want to see if we can hold around 4,400. I don't really want to see a break below there. I would love to see us trade and to continue to trade above a 0.786 fib area. I must tell you all that according to my cycles, as of the 21st of July, so as of this Friday, we are expected to see a change in momentum. And unfortunately that change is not back towards the upside, it's actually towards the downside. We do start to see some softening out, especially as we work our way through the month of August all the way up until October really. And then moving over to the NASDAQ 100, we've just sliced through the 0.786 fib area. So I want to see whether we can stay above it or perhaps just trade flat as we work our way through the month of August. As I've mentioned when I was analyzing the S&P 500, from Friday onwards, from a seasonal perspective, we do start to see some weakness in the market. So I definitely wouldn't be jumping in here trying to catch some of the momentum that's happened so far this year. If you're invested, then maybe stay invested, but if you haven't and you've missed it, I think that you will get a better opportunity. But I think that opportunity will lie as we work our way through the month of August, where a 5% correction may or may not occur. And then moving over to the Dow Jones 30, now a Dow has found support at the 50-day EMA. We discussed that during my daily analysis videos that I post over on YouTube earlier on last week. We've bounced off that 50-day EMA. We've now gone targeted the monthly swing highs here. If we can break above here, this could send us all the way up to that 35,200 area where that 0.786 fib area sits. I want to see the Dow play catch up to the NASDAQ and the S&P 500 by trading up to that 0.786 fib area, which sits at 35,200. We want to see more participation from the more cyclical names. The energy names have started to play catch up, which is fantastic to see. We're starting to see the financials start to trade very strong as well. This market is definitely starting to broaden out, and that's very positive for the bigger and longer term picture for the broad stock market here. Guys, that's it for today's video. I hope you have enjoyed as always. Also just want to let you know that if you would like to join my Signal team, it's completely free of charge to do so. All you have to do is scan this QR code on your screen. It will take you to my website where you can sign up. It takes 10 seconds to get involved, and this will also include my free daily market research that I post every single morning before the US markets open. So if you've been watching my videos for some time and you want to get involved, make sure you give it a scan. But I'm going to wrap up this video here, guys. Thank you very much for tuning in, and I hope that we all make some money.